All right, classmates, let's go back to the magical world of Dunder Mifflin, Scranton, and examine the depreciation and cost recovery topics that were discussed in Chapter 8. If you're a fan of the show, you know that hilarity often ensued at the Dunder Mifflin Scranton branch. The employees of the Scranton branch, namely Michael Scott, was notorious for destroying the assets that the company used for business purposes and in the production of income. You see the scene where Michael Scott destroyed the office fixtures using a forklift, as well as the scene where Michael Scott drove his car into the lake because the GPS told him to. Let's look at what that means for the cost recovery of those new and replacement assets. So let's examine the difference between the mid-year and the mid-quarter convention for MACRS depreciation. Let's assume that Dunder Mifflin acquired a used forklift to replace the one that was lost in the warehouse incident. They use a calendar year, which means that the third quarter ends on September 30th and the fourth quarter starts on October 1st. This makes a difference with the placed in service date, which is one of the determining factors when you compute MACRS cost recovery. So let's compare the difference between a placed in service date of August 18th and a placed in service date on November 9th. So the third quarter and the fourth quarter. First step, if you don't already know the property class, is to refer to IRS Publication 946, which describes examples of each of the different property classes. I presented 4 of them for you. We'll assume that the forklift qualifies as property not otherwise specified. It's property that doesn't fit under any of the other established categories. It's not an automobile, it's not a racehorse, it's not a tugboat. So we'll just call it generic 7-year property. Class determines the convention and the annual depreciation rate. If the property was placed in service in August of 2020, this means the property was not placed in the fourth quarter. So you would use the MACRS table for the mid-year convention. We look then at the MACRS table. We've obtained the one that's the half-year convention. We look at the column that's 7-year. We look at the first year's depreciation percentage, which is 14.29%. Now, what if we acquired the property in the fourth quarter, November of 2020? Because the property was placed in service in the fourth quarter, we will use the mid-quarter convention, not the mid-year convention. This requires a different depreciation schedule. As you can see, we've got the mid-quarter convention. We look at the 7-year asset class, and we look at the first year depreciation rate, which is 3.57%. So let's look at what that means. If the property was placed in service on August 18th, we would compute the annual depreciation expense for tax purposes by multiplying cost by the depreciation rate from the mid-year convention table to obtain depreciation of $6,216. If, instead, the property was placed in the fourth quarter, we use the mid-quarter convention. We multiply the cost times the rate and obtain the depreciation for the year at $1,553. This is almost 4 times the difference. Why? Because in the first example, the IRS is assuming that you placed and used the property for 6 months out of the year. In the second example, it's assuming you placed and used the property beginning in the middle of the fourth quarter, so around November 15th. 4 times the depreciation, 4 times the calendar year. Now, if you obtained multiple properties in a single year, for example, following the forklift incident, Dunder Mifflin is forced to replace the pallet shelving, which has a cost of $6,500, various electric stackers, which each have a cost of $41.45, and the heavy-duty forklift. The heavy-duty forklift is acquired on November 9th, as in the previous example, and the other 2 major property items were acquired throughout the year. Again, a key driving component of MACRS is the service date. It's important to note when the item is placed in service. To compute whether you need to use the mid-year convention or the mid-quarter convention for all of the property acquired during this year, you would look to see how much property is put into service in each quarter. We do this by looking at the asset cost, the percent of total assets acquired, and the quarter. In whatever calendar year this is, we've placed in service about $75,000 of property. The pallets comprise around 9% of the property placed in service. The 6 hand lifts comprise around 1/3 of the property placed in service, and the forklift comprises around 60-ish% of the property placed in service. Because more than 40% of the property was placed in service in the fourth quarter, you must use the mid-quarter convention for all of the property placed in service during the year. So for the pallets, you would refer to the mid-quarter convention table for property placed in service in the first quarter. For the hand lifts, you would refer to the mid-quarter table for property placed in the third quarter. And for the forklifts, you'd use the mid-quarter convention table for property placed during the fourth quarter. There's a few minor nuances on real property and the cost recovery therein. In season 7 of The Office, Dwight Schrute acquires the Scranton Business Park building. We know it takes place over this summer, so we're going to assume it took place on June 30th, and we're going to assume that he acquired the building for $850,000. We'll then compute the first-year depreciation on the office building and the 10th year depreciation on the office building. So the year he bought it and this year's depreciation. Non-residential real property depreciates over a time period of 39 years, and it uses the mid-month convention. I've placed the table for non-residential real property in this slide, and you can see it's a relatively simple table. You've got the month that is placed in service, the years of service, and then the applicable depreciation rates. We know that Dwight Schrute acquired the building in June. For tax purposes, we're assuming that he purchased the building in the middle of the month in June of 2010. The applicable depreciation rate for this purchase is 1.391%. So his first year cost recovery is $11,824. In subsequent years, he takes 2.564% of the cost of the building. So for years 2 through 39, we assume even straight line depreciation, and the yearly cost in year 2010 or 2020 is $21,794. So now let's take a look at additional depreciation. Your lecture slides had a detailed discussion about the Section 179 deduction. But we did spend a lot of time talking about the additional depreciation that was made legal under the Tax Cuts and Jobs Act 2017. Under this law, a business can elect to deduct full acquisition costs in the year in which the asset is placed in service. So, for the $130,000 worth of office furniture, which is 7-year class property, Dunder Mifflin can depreciate the entire cost in the first year it places it in service. The depreciation cost for the year is $130,000. The basis for the office furniture is $0. It can't take any more depreciation on that office equipment as long as they own it. But under the law, it's an election. The business or company can elect to deduct up to 100% of the acquisition costs. They can use 0% of this benefit or 100% of this benefit, or really anything in between. The textbook has an extensive discussion about the tax planning that goes into making this election. How much, what type, and when. So to give you 2 examples, Dunder Mifflin might immediately expense half and then save the other half for future years. Their first year depreciation would be 100% of $65,000 and the regular MACRS rate for the remaining $65,000. They would continue to depreciate the $65,000 basis over the 7-year life of the asset. They could also split the asset 30 grand and 100 grand. And again, they take 100% of the cost in the year plus the regular MACRS depreciation that would occur on the $100,000. The total first year depreciation would be the sum of those 2 numbers. Well, that's the ins and outs of depreciation and cost recovery. As always, if you have any questions, you can contact me via email or ping me on Moodle. Enjoy your problem solving.